Welcome to Smokin Bulls, the podcast about business, money, and lifestyle. Today, Dave and I are chatting about a smoking topic, which is inflation. It's rampant here in Canada and around the world. Well, Dave, inflation, what did we hear in Canada? 6.7%?
6.7 was the last printed number, but that was for March.
Yeah.
I got inflation written here, but nothing else written
That's
down.
it?
Yeah.
You got nothing else written down?
I got nothing, but I think there's so much to talk about.
Yeah, I guess maybe what's driving inflation.
Yeah, I guess that's probably a good measure. There's you read lots of people or talk to lots of people. They're like, well, gasoline prices are up 40%, but yet inflation's only up 6.7. How's that possible? And inflation's made up of a basket of expenses that would affect a typical Canadian. So not all costs are up and through the roof, but primarily a good bulk of them are. So I think the pandemic has obviously caused some problems. Primarily, well, we all had some money and we were spending that money, and that doesn't help. I'd say a housing supply issue is another reason you're getting higher inflation.
Well, I think the supply issue is a big topic all on its own.
Yes.
I mean, we've got supply issues throughout. I mean, if anybody's tried to buy anything in the last 2 years, whether it's, I know for us, it was parts on our oven. I mean, it took weeks and weeks for these things to come in. Housing is a supply problem because we don't have enough houses being built, like you touched on. So supply chain problems, I think, are broad and wide.
For sure. And not all corrected at this point. I mean, we still have, lots of ships out there that haven't been able to deliver their goods. And you have, lockdowns in Shanghai still from COVID. That kind of curbs a lot of movement of goods. So I think the supply chain is a really big one. I think that the war in Ukraine obviously has an impact on the pricing of things like oil, natural gas, any type of fossil fuel has been impacted. And of course, the carbon tax adds a bit, but I think we've had a much larger increase just in the cost of oil and gas and fuel than a 4% increase or whatever it was for the carbon tax. But you collectively add all those together, and we have an inflation problem.
Yeah. Well, I mean, supply is fairly simple economics, right? You have demand for a product and you don't have the product, so the price of that product is being increased by the demand for it. Now, obviously, because of inflation, federal governments around the world are forced to increase interest rates because they have to curb inflation. There's people that can't afford their groceries. They can't afford to put fuel in their vehicles. So increasing interest rates right now in Canada and in the US anyway, is that going to be the solution? Are we going to see that curb inflation?
I think it's part of the solution. I think it's a bit of a blunt instrument. Obviously, we have extremely low interest rates. So at some point, rising interest rates are there to curb borrowing of money at low rates, and it should stop people from spending some money, which in turn should lower some inflation. But if I don't think we know the makeup of what's, if inflation's gone up 6.7%, it's hard to say how much is due to spending and inputs and how much is due to supply disruptions. And that's the number we can't really carve about. So I think while you get your supply chain back in order, which will take some time still, that will have an impact on inflation as the lowering of prices come into play. And obviously increasing interest rates are going to curb people from spending money, borrowing as much. So it's going to help on that front. So what's the proper combination is probably the hardest thing to get right.
Right. And really inflation, I guess, could partly be driven right now by low interest rate environments that we've been in since COVID started happening. We had governments around the world drive their interest rates, their borrowing costs down to encourage people to spend money to get the economy moving or keep it moving. Yeah. So it worked. I think we had fairly strong economies through COVID, surprisingly, strong market returns anyway. And now we're stuck in a spot where we've got interest rates where I think they're in a position where they're not healthy. There's no room to move them any further in a downward fashion, so they have to be moved up just so that tool can exist again
in the future
for governments for their ability to lower rates, because they don't have that ability right now.
Right. So, I think this is going to be a big thing going forward. You look at what, high inflation impacts everybody, but for the most part, it impacts those that are really tight on fixed income or lower income, because everybody has a basic basket of goods that they have to purchase in order to survive. And people who have more money, they have the same basic basket of goods. They just have bigger homes and, they buy better cheese, I guess, at the store. So their grocery bill's higher, but the core part of a grocery bill for a family of four is still going to be pretty much the core. So somebody who has a lower income, inflation is really impactful compared to someone who has more assets. So when you make the change by bumping interest rates to curb inflation, you're switching some of that impact to those who borrow money. So people who have extended themselves to purchase a bigger home, or obviously we've touched on the housing crisis a bit. People who live in some of those bigger centers where a big part of their paycheck goes to interest payments. They're either going to pay more in interest or pay more to live. I mean, the bulk of their paycheck's being eaten up on just their housing costs. So one way or another, those type of people are getting hit. It'll help somebody who has a lower income, increase in interest rates, who has a lower income, but maybe doesn't own a house. These things are, they offset each other.
It's a smoothing, right? And it doesn't happen overnight. So as you increase interest rates, I guess the next, you don't see that smoothing where the interest rates have slowed the economy enough and gotten inflation rates down. You don't see it happen until after the fact. So I think what we run into is you've maybe run into a situation where interest rates go too high too quickly. And if that happens, then we're in a situation where we've got a recession.
You stall your economy completely because, if interest rates are running hot and get bumped up too much, people will borrow less and less money, which means you will have it'll help housing out, but businesses, people who have maturing mortgages, all of this impacts the cash flow that they have. And less cash flow means less money to spend on other things. And when you have less money to spend on other things, you either cause a recession from less businesses make less money, and it cascades type thing. So it solves some problems, but it could cause more, and that's the sweet spot that's hard to hit. And I think the argument always is that the Bank of Canada and the feds in the States never seem to get it right.
Yeah, they never hit the sweet spot.
Yeah.
They always raise rates too much and cause a recession.
Right.
It's almost guaranteed.
Yes. So I guess that's what we might expect in the end is
a recession after all
situation.
this. Yeah. Don't know when it'll come, but it's probably coming.
Yep.
Yeah. Okay. Any other comments around inflation, interest rates, where they're going, where they've been?
I guess we can maybe, how does it impact your investments? Obviously rising inflation coupled with rising interest rates would mean your fixed income portfolio suffers in the short term. It would mean your investment of equities, if you're commodity based, you're doing great. But if you look at them, you can go up and down through the charts of equities and fixed income. And I think part of the problem is each one of these sectors can do great because of inflation or interest rates. However, you have to be able to pivot quite quickly when changes happen to get into the next sector or the next asset class.
Yeah.
And we all know not many people are capable of.
Yeah, there's pockets of performance right now, and it's very difficult to find those pockets. And with interest rates increasing, I guess in your description, you raise an interest rate to somebody who's a homeowner. Of course, more of their expense goes towards paying their debt. If you raise an interest rate on a business owner, more of their expense goes to servicing their debt. They have less capacity or less ability to borrow and expand their business.
Or hire more people.
More people, same thing, expansion of their business, right? So if you have businesses that have been pinched that way, you'll see their value of that business decrease. And that's, I think, what you kind of expect in your general overall markets for investment perspective is a decrease in the performance of your investments just because of it's more difficult to do business, and the share value, that cost of that, or that profitability of that company is lower.
Right. And I guess overall, from an investment perspective, this is a sideways market for someone with a balanced portfolio. You're losing a bit on your fixed income. You're gaining on maybe portions of your equity portfolio where other portions are losing. So, most people portfolio-wise are, I would say probably pretty flat for the last 6 months. There are people who might have a much higher rate of return, but these are individuals that pile all their money into commodities, and then they'll try and switch and pile it all into something else. And I think very hard to win in the long run. Some people obviously have done well, but not many people can.
Yeah, the timing
do
thing
that.
is
Yeah,
pretty tough.
it's kind of like your friend that seems to win at the VLTs all the time. Yeah, never lose a dollar. Always up. So I guess that's a little sidecar there on our inflation topic. Yeah, I think that pretty much covers.
I think so too. So inflation is a hot topic right now, a smoking topic, in fact. If you want to find out more about us, go to smokinbulls.com or follow us on social media.